want to make it clear why this is an important conversation right now. We are experiencing in commercial real estate a big slowdown, in some cases a freeze of lending by regional banks, smaller banks who typically fuel a lot of that lending. And with this is an important thing when you're an investor in real estate, because financing is such a big element of owning a property, of the value of the property, of the potential cash flow that comes from the property. And one of the things that is so important about owning multifamily are the options for lending that come from the government, HUD being the direct source, and then also Fannie, Freddie, which is more government sponsored. And so we wanted to have you in to understand how financing from HUD works for multifamily, because so many of these, the traditional lending options or the common lending options are now it's either frozen or it's moving so slow it looks like it's frozen. Those options have really gone away. And just to start out, have you seen that? Have you seen an increase in folks turning to HUD, or volumes about the same? And then what else are you seeing when it just comes to the lending market in general for commercial real estate?
Oh, there's absolutely been an increase in how popular HUD insured financing has become. And I just wanted to clarify one little part of it is that the loans are not coming from HUD, they're actually coming from the Ginnie Mae investors on the secondary markets. The lenders, us, we actually are lending on it, but they're securitized
Yep.
by the Ginnie Mae investors. HUD insures those loans, which allows you to get better terms on the financing and much lower interest rates as a result.
So HUD comes in and says, these loans, if they default, we're going to have a backstop for you as an investor,
As a lender.
as a lender.
Right.
And so folks who have their money there, it feels a lot better to know that HUD has that insurance.
Absolutely. The reason why it has become more popular, especially this year, is that there has been a huge pullback in the amount of lending that's happening, especially on the construction financing side. The banks have really pulled back, or their requirements for money that you have to deposit with them, their deposit requirements are very, very high, and their terms aren't very good. I mean, 50% loan to cost isn't that great, especially with the interest rates at 9% on some of those loans. There's really nothing in the debt funds. The life companies have pulled way back as well. So HUD insured financing has become extremely popular for construction loans, especially. The HUD offices are very busy right now with many concept meetings to see which deals are going to work, and that's kind of a big reason why I'm seeing it.
Are you able to lend? Is HUD able to insure kind of an unlimited amount of loans, or is there a requirement, a cap on how many they can insure? So now they're seeing much more demand.
Yes.
Is there a concern that HUD says, hey, this is all that we're going to insure, or how does that work?
It really has to do more with the market demand than anything else. I mean, they will actually cap the number of loans that they want in a particular market if they see it being oversupplied.
Okay.
So that's one of the main issues. There are markets where they are pushing back a little bit on the amount of interest, like Austin, for instance.
Okay.
There's a lot in the pipeline for new construction there. Now, whether all of that is for real or not is another story, because we see those, projected developments or planned developments, but are they actually getting financing?
Yeah.
If they're not going with HUD right now, they probably aren't because the terms are going to be too extreme for them. Phoenix is also an area they have had some concerns about the amount of pipeline and the supply, but you really have to break it down by submarket every time you're looking at any deal here. So you're going to have submarkets that are showing that they have, like downtown Phoenix, they're concerned about the number of units that are coming online there. But in the East Valley or in the West Valley, they may not have those same concerns.